Hello everyone, I'm Rakshith Pai and today I'll talk about one micro cap company that has the potential to give a decent return to investors if held for long term. I'm not here to say that you'll become crorepati if you invest in and so and so. All I'm saying is this company is worth under 500 crores in market cap and has shown tremendous improvements in its earning growth, and we'll see whether it's worth investing. So today's analysis is on DP Wires Limited. Is it worth investing? Business introduction. Founded in 1998 as a private limited, DP Wires Limited manufactures steel wire and plastic products. Products such as LRPC strands, induction tempered wire, geomembrane sheets, PE coated and greased strands, plastic film sheets, etc. The production facility of DP Wires is located in Ratlam, Madhya Pradesh, and has an installed capacity of 50,000 tons per year. DP Wires also generates electricity with its two wind farms in Jamnagar district, each with a minute capacity of just 0.80 megawatt. As of March 2021, promoters held 70% of the company. Fundamental analysis. Company's revenue from operation has been consistently rising and has given a sales CAGR of 24% for the past 5 years, with profit growth of 62% CAGR during the same period. DP Wire's operating margin is pretty low at just 6 to 7%. With the growth in business, considering the economics of scale, I believe the OPM will soon be in double digits. Company has debt capital which includes borrowing and other financial liabilities worth over 7.5 crores. Comfortable debt range. The major issue seen in DP Wires Limited financial is that the company has huge trade receivables amounting to rupees 85.57 crores, and the same is booked under unsecured, meaning no collateral. Usually small cap companies find it difficult to receive their amount from sales. They run with a very thin cash reserves, which is often noted amongst many small and mid-sized firms. But receiving the stuck amount shows the efficiency of the management, and as of now, in this regard, the management has shown poor performance. We can't fully blame the management given the fact that the cash crunch is a new norm due to the China-based pandemic that's going around. DP Wires reserves and earnings per share has been continuously rising, a very good sign for efficiency. As per my calculation, a fair value of rupees 145 per share can be given, and the company is, based on these metrics, definitely overvalued. Obviously, the stock price has risen over threefold in just 1 year. So that explains the high valuation. In the stock market, unless we are in a sheer crash or a steep correction, the stock price usually don't quote to their exact valuation. In such a case, we consider the risk reward situation and try to quote a price that gives us a comfortable margin of safety whilst bringing in return what we prefer. With that said, my margin of safety per share comes at 292 per share. So I'm not gonna pay anything higher than 300 per share based on the current valuation. But the company is really good in regards to its financial performance. Technical analysis. DP Wires has reached its peak pricing in the last week of January. Post that, be it due to US interest rates or budget sessions, the stock price has seen a 12% drop. Since it's a small cap company with very few free float equity shares, there are not many technical indicators to rely on. But one fact is straight: the company is overvalued and the stock price is correcting. Whether the stock corrects to reach its true valuation is to be seen in the near future. SWOT risk analysis. Opportunities and strength. Number 1. Budget 2022 was all about infrastructure, with spending of about 7.5 lakh crore. Check the link in the description. I have made a video on budget 2022 and another video on important sectors to watch out post budget. Basically, huge capex directed towards the infra sector will benefit allied sectors such as cement, paint and chemical, and other industries such as steel wires. For example, DP wires. Number 2, DP wires caters to a wide range of customers. A well diversified customer base of around 150 to 200 diversified industries which include oil and power, automotive, construction, infrastructure, etc. Number 3, moderate working capital requirement with low dependency on creditors and bank loans. Number 4, healthy operating profitability with room for improvements in margins and placed well to grasp market share given the importance government has shown towards infra spending. Weakness and threat. Number 1, the company is sensitive towards steel price as it is the company's core raw material. So sales, financial status and profit margin will be affected with a drastic change in steel price. Number 2, low entry barrier and the sector is filled with multiple organized and established players and also unorganized operators. Thus, DP wires have very little room to command over its pricing. Conclusion. Small cap investing always comes with a risk, more so than usual. And in this case of DP wires, although the financial performance has been satisfactory, the company's receivable is worrisome. We are not sure if and when the company be able to receive all of its unsecured receivables. Apart from that, I haven't noticed any major issues to mention. Company's financial is good. They are showing improvements. I will update my review on the company from time to time on this channel. If you haven't subscribed, please like and subscribe. Click on the bell icon to get notification of my future uploads. For now, I'll give 7 out of 10 rating for DP wires and I have invested in the company with just 0.5% of weightage. That's it for today. Thank you for watching.